Hey everyone, it's no secret that artificial intelligence is the hottest investing trend in 2024. In fact, it was the hottest investing trend in 2023. So in this video, I'm going to compare three of the hottest AI stocks in the market today: Supermicrocomputer, SoundHound AI, and BigBear AI, and answer which one I think is the best AI stock to buy today. So let's get right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so the first metric I'm going to compare these three AI stocks on is revenue growth. And judging by this metric, you can see Supermicrocomputer with the highest revenue growth here, 103.2% in its latest quarter, followed by SoundHound AI with 80.48% revenue growth, and last place with minuscule revenue growth, BigBear AI, 0.51% revenue growth for its latest quarter. Now, looking forward, if I was to look out, let's say 5 years, I would say SoundHound AI has the best revenue growth prospects out of these three for the next 5 years. Looking at the next quarter or next 2 quarters, I wouldn't be surprised if Supermicrocomputer continues this elevated revenue growth expectations for at least the next few quarters. But longer term, I think Supermicrocomputer's revenue growth rate will slow down first, and SoundHound AI will maintain the higher level of revenue growth for longer, even though it's likely to trail Supermicrocomputer in the next few quarters. Now, I also wanted to compare these three AI stocks on their operating profit margin. Now, I don't mind when companies are losing money on the bottom line. That's just the nature of business. When you're starting out, you tend to lose money to begin. But what I want to see is progress towards profitability. And with SoundHound AI, which is the company that's losing the most money on the bottom line, it's also making the most progress. You can see its sharp increase in operating profit margin from negative 450% to negative 139%. And in early 2023, the company made big improvements to improve its profit structure. Similarly, with BigBear AI, the CEO told investors last year that, look, we're in a tough situation. We need to get things right this year so that for 2024, we could be in a better position to expand. And that's what they did. They got themselves in a better position. And now the BigBear AI CEO suggesting that 2024 is going to be much better than 2023 now that they've put themselves in this better position. Supermicrocomputer, meanwhile, 9.4% operating profit margin. Longer term, it's been operating at a very thin operating profit margin and it hasn't been expanding. I don't expect this to expand over the near term either. One of the reasons is management is taking a land and expand strategy. It's trying to increase sales by offering better terms to start with and then hoping to expand with those new partners that it lands deals with. So, and overall, it doesn't sell very high profit margin products to begin with. It's hardware based, not very much software in its business model. So hardware typically not very high margin business, although the company's new liquid cooling solution could be better than its previous solution. That remains to be seen. Overall, profit margin will probably be Supermicrocomputer's advantage going forward, while SoundHound and BigBear make progress, but they will still be behind Supermicrocomputer at least for 2024. The next metric I wanted to compare these three on is cash flow from operations to sales. A lot of times you'll see tech companies have negative profitability, but then positive cash flow from operations. The main reason for that is stock-based compensation. That's an expense on the income statement, but it's a non-cash expense. So you have positive cash flow even if you have negative profitability if the bulk of your expenses are stock-based compensation. So in this case, that's not what's happening. They're all three negative in cash flow from operations, with Supermicrocomputer being the highest and SoundHound AI again being the one that's making the most progress. BigBear AI negative 11.8%, making progress as well, but not at the speed of which SoundHound AI is making progress. Supermicrocomputer relatively flat to declining in this metric, and in its latest quarter, it suffered a significant negative cash flow from operations as it implemented that strategy I highlighted earlier where it tried to get in with businesses and then expand. Also, when you're growing as rapidly as Supermicrocomputer is, and you've got inventory expense like Supermicrocomputer does with hardware, you tend to experience fluctuations in cash flow because you're going out and you're spending money on inventory, and it takes time to take that inventory, sell it to a customer, and get the customer to give you cash, because a lot of times customers won't give you cash immediately. You'll have an accounts receivable and you've got to collect that cash later on. So that negative cash flow from operations is worsened when you're growing faster because your collections from the previous period are trumped by your newer sales and your newer level of collections, because now you've increased sales by 100% like Supermicrocomputer did. So that's going to be a headwind for Supermicrocomputer. That could partly explain why the company is selling so many shares into the market. You announced the share price offering, which I talked about in a video a couple of days ago. That could be one reason, because they were going through a lot of cash trying to execute on their growth prospects, and so they needed to raise more cash in order to sustain this business model. All right, I also wanted to compare these AI stocks on their balance sheet. I want to see how much cash they have and how much debt they have. Supermicrocomputer had $725 million in cash and $375 million in debt. These numbers are going to be updated shortly, as the company has made a lot of capital moves, namely that stock sale, which is going to change its cash balance significantly. SoundHound AI has $95 million in cash and $84 million in long-term debt, a roughly 1-to-1 ratio there. And the one with the most troubled balance sheet is BigBear.ai with $32 million in cash and $195 million in total long-term debt, roughly 6 times as much debt as cash. So if you're judging the balance sheet just based off of the ratio cash to long-term debt, then Supermicrocomputer has the strongest balance sheet according to those metrics. Finally, I wanted to compare these 3 AI stocks on valuation, and the metric I chose to use is the forward price to sales ratio, because Supermicrocomputer is the only profitable one out of these 3, and all 3 were negative in cash flow, so I was left with fewer choices and I chose to use the forward price to sales ratio. And according to this metric, SoundHound AI is nearly 10 times as expensive as the other 2 stocks, trading at a forward price to sales of 23.86. Supermicrocomputer trading at a forward price to sales of 2.437, almost the same as BigBear.ai at a forward price to sales of 2.290. So if I had to pick out of these 3 AI stocks, which one is the best one to buy today, I would pick Supermicrocomputer stock today as the best stock to buy out of these 3. The valuation for SoundHound AI has been exploding in 2024. You can see that sharp increase, and so that would sway me away from SoundHound AI and towards Supermicrocomputer in this choice here. And then BigBear.ai would be 3rd place in my rankings of these 3 AI stocks today. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.